This is the One Step Better podcast. Helping small businesses make wins each and every week. Hey everybody, welcome back to the One Step Better podcast. I am Mike and this is Matt, and we're really excited for you guys to be listening in and joining us as we continue to talk through some new things, new habits, new routines that we feel is really important for all business owners and leaders to start to develop or at least think through in your organization. And today we're going to talk about a really important one about money management. Building rhythms and routines is super important. It helps you stay organized. It helps you stay on process. And there is maybe no more important rhythm to get into if you're running a small business, especially than managing your money. So we're going to talk about cash. We're going to talk about profit. We're going to talk about revenue and all of the things tied to those that you should be thinking about as you start to get into leading your business. So Matt, where do you want to start?
You know, we had conversations around budget, a couple months, about a month ago now.
Yep.
When I think about money, it's about having a purpose for what I get. Where do I want to go? What do I want my investments to, where do I want to invest in new technology, CapEx? Where do I want to put my money into savings? But how do I make sure that the lifeblood of my business is available to do the things that I want to do? Is my business as profitable as I want it to be? So I think through the idea of the lens of this is a resource I have to manage. And it is probably the number one resource in your business.
Yep.
Maybe you could put that or people there, but both of those are pretty high on the list.
Well, you don't have very many people if you don't have
any
the
money.
money to pay the people.
Correct.
We're 3 weeks or so into 2024,
Yep.
And there's probably some people out there that are coming late to the party, and they hear the word budget, and it's like, oh, maybe I should do that now that we're starting a new year.
Or they just got their credit card bill and go, what the hell did we spend for Christmas?
Dang it! Next year we're gonna cut down.
We're not spending that this year. Next year we're playing. Everybody's going to pick one name. They're going to exchange that with all their family members, and we're only getting one gift. And it has to be under $10.
I heard that every year growing up. Next year we're gonna cut down, and I'm pretty sure as an adult I've said it every single year.
Yeah.
But you're absolutely right. They got their credit card, and it's like, oh man, I now have to pay this, I guess.
Yep. Did you really do a good job of planning for the Christmas budget? Did you know what you're really going to spend?
Give us the 2024. We're 3 weeks into the year. I'm just now thinking about budget for the first time. The shortened, if you want to hear the full story, go back about 5 podcasts or so and listen to the whole thing. But give us a short, we're in the year now, 2024 budget. What do I need to be doing?
Starts with setting a goal, having a clear vision on what you want to accomplish this year, projecting out truly what that looks like, setting up reasonable expectations of why you're in business, which is I'm here to make money. I need to make sure my money's set aside for the things I know I'm going to have to spend in the future. And I'm going to critically evaluate where our money is going so that we have a plan for the money. It doesn't plan us, we plan it.
When you talk about money, I think it's important to think about that from 3 specific areas. And you might be able to add on to this a little bit. I think it's really important. I need to know where my cash is.
How much money is in the bank?
How much money do I have in the bank? How much money do I need in the bank? All that type of stuff. Cash is super important. 2 is revenue. How much money are people paying me? What is my top line? What do I have to work with? What's coming in? 3 is profit. This is how much money me as the owner am I going to take home. The reason I say it's important for those 3 things specifically is because a common theme that we hear in our business, the clients that we work with is, hey guys, you guys are giving me a financial statement at the end of the month that says I made however much money I made, $100,000, $10,000, $2, whatever it is, and I don't have any money.
Correct.
Why do I not have any money?
Because an income statement doesn't actually reflect cash. An income statement is the accounting of the ins and the outs of your business. Some things hit the income statement, but a lot of things don't. And so I made $100,000 this month, but if I'm doing true cash, I invoiced my customer for $150,000. I haven't gotten that payment yet. I'm probably showing $150,000 of revenue on my books right now, but I don't have any cash in my hand that I can now spend until they pay me. And so most of the time it's really how do I actually have the money that came in that I'm showing that I invoiced, and if I paid bills for last month, this month, and so the expense is this month, but the payment was next month. You know what I'm saying? So like the timing of that cash versus profit are not equal. And it's very common. This happens almost every client when we start talking like, I didn't make that much money. I'm like, no, you did. You made this much money. You spent this much to pay off these notes. You put this much out personally, which is not deductible, and you haven't received this money yet from your customers. Oh, that makes sense. I still don't have any money. So I don't want to pay taxes because I didn't really make that money yet. Well, no, you did, but you've already spent it and you haven't received it yet from your client, your customer.
So when it comes to like just, I'll say running a business 101 and managing your cash, how do you do that in a way that is thoughtful, proactive?
We use profit first in our own business. The principle there is we know that if we want to make 10% of a profit, then that means 10% of every dollar we collect goes to the profit account. I'm going to work backwards from how much I brought in versus what I was expecting to make. If I project that we're going to do $1 million and I'm going to make 10%, I have $100,000. Every time I get a check, I'm going to take 10%. If we only do $900,000, then I'm only going to get $90,000. I don't still get $100,000. It's very correlation. If we do $2 million, I'm going to get $200,000, but it's the same logic that allows you to not outspend your expectations. That is very common with small business owners. I know we've done it. I've done it personally as well. I live on what I think I'm going to make, not what I really do make.
Yeah. And by having a model, in our case, we talk a lot about profit first, but that model is what allows cash, revenue, and profit to all kind of be tied together so that I know that my revenue was X is going to turn into profit that's Y, and that's actually going to impact my cash as Z.
Yep.
And so it's the model. So give me an overview of profit first. What does that look like? How do I start to implement that in my business?
Yeah, the rhythm there is once we've got our budget, and I say budget, they call it a revenue analysis or a analysis of your financials. But the reality of it is it's basically a budget. Hey, based on what I know right now, I'm expecting to do this much in revenue. I want to make this much money. I want to be able to pay myself, I say profit. I want to pay myself a profit on this business. I want to pay myself as if I was an employee in this organization. I want to have money set aside for taxes because I know I have taxes coming up. Whatever's left from that is what I have to operate my business. And so you're working from the bottom up. It creates, if you think of it as buckets or envelopes of, for every dollar, I have a purpose now where that dollar has to go. And it allows you to have a rhythm of that. Now, how that works is, reality is once a week, we look at all the monies we've collected. We use that same percentage that we think we're going to make. I move the money into the other accounts, physical accounts at the bank. There's a rhythm at every twice a month. You move that money out of those buckets into your personal bucket or your tax bucket. Every quarter, whatever's in your profit bucket, you have a priority what you're going to do with your profits. First, you're going to take half to pay down any debt you have. The second half is your money to do as you wish. In our case, some of that's paying down personal debt, or that could be putting into savings, putting in investment, buying a piece of property, whatever that may be. But I now have a very fixed structure to know what to do with my money.
This is a tangible rhythm of things to do. It's not just, I'm making X dollars. We send out an invoice, we collect a payment. There's a weekly touch of your bank accounts.
Absolutely.
Where you can connect the piece of paper that your accountant gives you and says this is your financial output, and the actual dollars that you can see in your bank account.
Correct.
You're touching that weekly, monthly, quarterly.
Weekly, every week.
Yeah.
Twice a month for your rhythms, for your what they call is their. I think of that as that's the account somewhere else that can't easily touch. So we put our profit there and our taxes are
That's
there.
trying to get out of sight, out of mind.
Out of sight, out of mind, because we all know if it's in the bank account, I'm going to spend it.
Yeah.
And then quarterly, when you're done, you're going to change. You're going to figure out your percentages for the next quarter. Whatever's left in your profit account, you're going to do as you determine, if it's debt or whatever. And out of that tax account, you're going to make your tax payment. And now I have money in the bank to make my tax payment because I already put it aside. It was out of sight, out of mind. The problem runs into, you'll find out real quick how accurate your percentages are versus reality. So they have what they call the targeted allocation percentage. Like, here's what I want to be at, and here's my actual. My actual and my target are probably not the same thing. I'm going to have to work my way to a progression where I can eventually get more profit and more owner's pay and more money in taxes based on us improving operationally, make sure we're not spending money where we shouldn't, either that or driving revenue up to get the offset we need to have. One of those things has to happen.
And this model that we use here, it forces a business owner to be proactive about their finances because you don't have the freedom. That's not the right word. You don't have the privilege of being able to say, oh, I have $100,000 in the bank. Let's go buy a fancy new truck or whatever it is, because those dollars, and this is the old Dave Ramsey saying, I'm going to spend it on paper before I get it in my bank account so I know where it's going. Every dollar has a name.
It is the total money makeover for a business.
Yeah.
if you would.
Yeah. And now some people may say, I started a business so that I don't have to follow these rules, that I don't have to have this structure. I want the freedom of doing whatever I want to do.
You absolutely can do that. Your chance of making what you truly intend to make goes a lot down, in my opinion.
Yeah.
Like anything, if you have a plan for something or a goal set, it's easy to have you have a goal to go achieve. It makes it a lot clearer for you. When you leave it up to chance, and that's even on the budgeting process. If I don't budget or I don't create a projection or a forecast, I really don't know where I really want to be. Then it's easy to get to wherever it's going to be hard to either achieve your goals because you don't even know what the goals are, or it's going to be easy to be disappointed because you didn't have a goal.
So one of the big areas that can start to drain people of cash, you mentioned, just because I got $1 revenue doesn't mean that that's a profit dollar, is through capital purchases. I need to go buy a new piece of equipment, or maybe I'm going to go buy a building or whatever it is. How do you start to plan for, hey, in 5 years, I know that I'm going to need X, or next year I know I need to replace, a piece of equipment?
Profit first would have what's called special accounts at that point. So let's say I know that I'm going to have to buy a piece of $250,000 equipment in 2 years or 3 years or 5 years, whatever that is. I would create a separate account. I would figure out how much of my percentage of my stuff that's going to go down today. Either my profit's going to go down, or my pay is going to go down, or my operating expenses have to go down to offset and put that money aside so I can have that money in my bank account when I need it. That is very common. A lot of times people do that for inventory. They'll do that for specialty projects and acquisition. The special project accounts are designed to be, how am I truly, this is no different than your house. I have a can for the vacation we're going to take. This is the can for the business. Yeah. It's the same logic.
I know I need to replace a roof in 5 years.
I better start saving now, or I'm going to have to come up with $30,000.
So would Profit First say that I should avoid debt? Instead, I should plan ahead for those items?
They're not 100% anti-debt. I think they take a hedge there a little bit. They do have some Dave Ramsey tendencies, which is no debt. But overall, it could be, I know here's how I'm going to cash flow that note through operational expense because it's not profit. And it's
so I may not necessarily need to save up the couple $100,000 to buy that new tractor.
Correct.
But I do need to have a plan on maybe how I can borrow and cash or pay, service that debt if I was going to go that route.
The debt service and the principal payment, if you didn't set money aside, it's going to be part of your operating expenses. That's an operational, it's not, but it really is.
Yeah. That's interesting.
And all it's doing is shrinking your short-term profit. So at the end of the day, if you already put the money aside and all you're doing is putting a purpose to what you want to do with your money. At the end of the day, it doesn't matter what you choose. You have a plan of how you're going to pay for it.
So if I was let's say maybe an established business that's jumping into something like Profit First, I'm a typical business owner. You said I'm making money, but it doesn't feel like I'm making money, or maybe I'm not making as much money as I would want to make. What's the first number apart from revenue that you're projecting out that you're going to put pen to paper to? Is it the percentage of profit that you want to take home?
How much do I want to take home?
And then everything else is the guardrails. I may have to say no to buying something because it's not in the budget.
Like we said, your actual today and your target are not the same.
Yeah.
So you're going to have, you do an expense review. What can I look at in our operational budget to reduce? What's my gap of revenue I have to get to my profit at the rate I want to have? And it's they call the Pareto principle, the 80%.
Yeah.
If you limit what you have, you will make different decisions. Like, I only can spend this money. I don't really need that new piece of software today, I mean, I know we could go get it, but maybe we should see what can we do else to get us to the same goal. You're gonna squeeze down on, you're gonna delay some of your current tendencies that go, yeah, let's go do that. We have the money in the bank. No, I don't have the money in the bank. The money in the bank is this. That's all I have to work off of. And so that's how logic works.
As you say that, it makes
so much sense.
Well, a couple of weeks ago, on this podcast, we talked about personal development. And one of the things that, like reading and hanging out with people that are doing the things you want to do and listen to podcasts, one of the things that it forces us to do is push pause and actually think about things that are maybe more important. And this is no different.
Nope.
This is creating the rhythm, the routine in my life, the margin to be able to say, I'm going to focus on the business for, if nothing else, during these moments where I'm looking at these bank accounts, putting the money in the right buckets. And then from there, I can develop the discipline to say, hey, you know what? I can't go touch that tax account to go buy that Ferrari I'm looking at.
Yep.
I actually have to save up for that because that money is already spent in my mind.
Correct.
It's just the rhythms to develop discipline.
The hard things about this are you're not going to get it right in the beginning. So you're going to put money into your profit account, into your personal account, into your tax account, and the operating money that's left isn't enough.
Yeah.
That also tells me I'm not making what I thought I was making, or the cash flow rhythms of my business don't allow me to make
are
different. And so that has to be weighed into the equation. That's why you're not going to get it right the first quarter. You're going to get it better. That's why they say you start with, I'm putting 1% to profit. Mm-hmm. I want to get in the rhythm of I'm putting money to profit. I know what I'm taking home today personally. I have to find that gap. So the first thing we do is a gap analysis on all these accounts of what you have set aside, how much cash you really have how much you expect to pay, and how much money you have involved. And you're building up these little buckets of money.
This is like it's
same as a home budget.
Same as a home budget. I think I remember the first time we ever set a home budget. It was like, all right, we're going to spend $500 on food.
Yeah,
and then the month happens, and the first week goes by. And it was very clear, like, oh, I had no idea that we were actually, because, we go to Kroger and that's $100. We go to Kroger and that's $200.
Go out to eat one
meal.
Go
out to eat. I got 4 kids. It's
$100.
$100. And then you look
for
up
almost
and
Chick-fil-A.
And that was just like, oh, well, I thought we just spent $100. Well, yeah, we did 6 different times this week.
Yeah.
And you don't realize that when you're in the moment.
We did the envelope system at one point with Ramsey.
Yeah.
You have these envelopes like this, and you're like, cash your whole check and do this. I'm like, I don't have any more envelopes that have money in them.
Yeah.
I'm out. And you're like, oh, I'm going to steal from my future personal expense. I'm like, well, then I can't go get a haircut this month or whatever it is. You're like, crap, I'm out of money.
Yeah.
Okay, I have a problem. I'm spending more than I make.
Yeah.
Then you're like, how do I fix the revenue part to get where I want to be?
But it shines a big old bright spotlight on what I think is happening is either I'm right, which most likely it's not, or I'm wrong. There's something off. There's something that's not happening the way I expected it to.
As we talk through this, I know, a lot of business owners are probably more sophisticated than this or think this is silly. And I would probably agree with you, except for I guarantee you don't have money set aside that you want to. You don't have a plan for your money. It kind of either you're making plenty enough that you can just wildly spend, or you're not making what you want to make. Mm-hmm. And it's a system to implement, to create, to achieve the goals you want to achieve.
We talked about this internally. This is an accounting firm. The people that work here are pretty decent on knowing about money.
Accounting. They're good at accounting.
Yeah.
They don't know shit about money.
Yeah, maybe a better way to put it. They know how to keep track of money, I should say. And then we rolled out a budgeting tool to our team, and some of the feedback on that is like, oh, I didn't know that's how. Like, I didn't know that's where my money was going, mm-hmm. And it's the cobbler's son has no shoes, you know. And I think you're right. A lot of business owners that are wildly successful, they can, in a lot of ways, they can spend their way out of the majority of problems. But what if they took a little bit of extra discipline to start putting money away intentionally towards a goal? It would wildly change, future outcomes.
And I think that the weird thing to think about this is, what is your business worth today if you're making it more profitable? Mm-hmm. I'm assuming it's making it more valuable. So if you're positioning to sell, you should be on profit first. If you're positioning yourself to open another location, profit first. Like, it makes a lot of sense because it really does help you achieve your true goals, which is A lot of businesses want to add to their balance sheet and making the business worth more so they can eventually sell it. Best way you can do is you're going to get a multiple of your profit or a multiple of your revenue. Either one of those things are going to go up, which means you're building your asset even more.
And it never hurts to have a big old pile of cash sitting in an account somewhere for who knows what.
That FU fund is nice to have.
Yeah. Excellent. Good conversation. Code word of the week. This is the code word that you need to email us at onestepbetter@whirks.com, WHIRKS.com, in order to qualify for some free swag. And so the first few people that send us this code word are going to get a package of some really cool stuff.
Probably a Profit First book.
Yeah, that's a good idea. We'll give away a Profit First book as well as some other cool stuff. Maybe even a gift card if you're lucky. Code word for the week, straight cash, homie. I don't care how you spell it. Straight cash, homie.
Or you can send us a video from Randy Moss. I take that too.
That'd be good.
Yeah.
So onestepbetter@whirks.com. Let us know your code word and you're going to get some free stuff. And thanks for listening. Make sure you click subscribe so you don't miss next week's episode of the One Step Better podcast. Thanks for listening to the One Step Better podcast. I'd really appreciate it if you would take some time to rate us 5 stars on your podcast player of choice and make sure that you subscribe to our YouTube channel so that you never miss out on another episode. Thanks and have a great day.